Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about if I were to start over from swing trading, what would I do? What would be the software, the strategies, the tips and tricks that I would do to jumpstart my learning so I could be a full-time trader? That's what we're going to be talking about in today's video. So I hope you guys all enjoy it. And if you guys do, hit that like button and subscribe. And don't forget, if you guys want to learn more about swing trading and trading in the market, check out our school. Today is the last day for the 50% off sale. Code SCHOOL, 50% off. I'll see you guys in there. We got private live streams, quizzes, lectures, a group chat, everything if you want to take trading to the next level. Check it out down below. It's the Swing Trading Masterclass. So guys, let's jump into this. So the first thing that I would do if I were to start over from scratch is focus on education. When I first started trading, I actually used to day trade back in the day, which sounds crazy, but what I did is I jumped in the driver's seat and I started trading. I felt like this was the worst thing I could have done. And the reason why I say that is because trading, it's a job, it's a career, and you have to treat it like one. What I did is I saw videos of YouTubers and TikTokers, whatever it was at the time, and I saw them making thousands of dollars every single day, and it looked super, super simple. But what I did is I funded an account with about $1,500, and I actually placed my first trade in my college class. And obviously, I had no idea what I was doing, and I grew it to $1 billion. No, that is not what happened. I burned through $1,500 in about 30 days, which I'm surprised it wasn't quicker, but hey, I then took a step back and said, what did I do? I just burnt through $1,500, which at the time, I'm in college and this was like the most money I've ever had. And then I took a step back and one, I couldn't trade because I had no money. So I looked up ways to trade with no money. And I came across paper trading. And I felt like this would be a great starting block. And if you're just starting out, don't even fund an account just yet. Focus on education. Focus on paper trading. Now with paper trading, what it is, for those of you that don't know, it's a way to trade and practice a strategy with using simulated money. Now, the broker that I used at the time is I transferred from Robinhood to Moomoo. Now, Moomoo is a trading broker. So what it means is it has really good charting. It really has good scanning and indicators. It's designed for traders. Robinhood, on the other hand, is more designed for just beginner investors or just investing in general. And don't get me wrong, you guys can swing trade with Robinhood and still grow an account and make good money off it. But I wanted something where I could actually look at, understand, and I wanted to be a trader, and this was a trading broker, so I was super excited. So I went from Robinhood to Moomoo, and what I focused on is learning as much as I could. So I watched countless videos, hours of videos, I would say, almost every single day on trading the markets. Now what I did is I picked bits and pieces from people that I liked. And obviously, during this time, with the paper trading, I was in college and I didn't have, the daily access of actively watching the market. So I transferred from day trading to swing trading, and it really, really helped me out because I could still go about my day. I could still be in my college class. I could still keep an eye on the market, but not be actively in tuned with the market, if that makes sense. Where, swing trading, you have a lot more flexibility. You can, you don't have to be glued to your computer. So during this time of paper trading, I did that for about 6 months. Now, during this time after about that 6-month window, I funded my Moomoo account with about $500-ish. Now, at the time of this, I really saw somebody do the 1 share challenge. I saw a random video on YouTube of somebody talking about it, and it's something I actually really, really love. And what it is instead of, dumping all of your money in on every single trade starting out, what you do is you just buy 1 share. Investing or trading with 1 share really, really helps you build up an emotional tolerance to trading because now you're using real money, you're using real capital, and you're going to continue to use the same strategy. So when you buy 1 share, the only thing that's separating you from making more money isn't the strategy, it's just the account size. So I understood that as long as I just continue to trade and just practice this 1 share rule, I can help my strategy and, actually slowly grow an account. So then I dumped in more money, right? Saving up, I put in a little over about $2,500, And then I've focused on base hits that compound over time. That's the little thing that I love. I'm not a trader where you're going to find me trying to buy a stock at $1 and sell it for $300. I'm not that type of trader. I'm the type of trader where I might find a stock for $5 and sell it for $5.20. But I do it consistently over the course of a year. So what it does is it compounds your accounts. It gives you realistic returns. And honestly, it's something you can count on. I made the transition from, from my job to swing trading full time about 6 years ago. And that has helped me out so much because now instead of being in a risky situation where either I'm trying to grow an account, from $100 to $1 billion, I can now focus on these small returns that just compound over time. Now, yes, with that strategy, you do have to pretty much put in some larger amount of money, which is fine because you're focusing on base hits. But two, it's doable. Looking back, I felt like these full-time traders, I saw every trader just trying to grow an account from $1,000 to $100,000 in 30 days. And honestly, it really, really messed me up, emotionally and psychology, with my mental state because I wasn't doing that. I was only growing my account smaller, but I took a step back and I thought about it. Okay, if I can do this consistently and just grow my account, I can do this full time when I have a larger amount of money. And that's exactly what I did. So guys, now that we understand that stuff here, let's talk about a trade here that I absolutely love. And it really, really focuses on my strategy here. So this one here is, like I said, this is using Moomoo. So Moomoo is a trading broker for those of you that don't know, and it may look a little confusing or overwhelming, but trust me. So what this is each candlestick or each of these, red or green represent one trading day. So you guys can see on this trading day right here, there's a pretty good spread of stock. And on this one here, we had some good sell-off, right? So what this does here is it establishes, and what I look for is a stock on an upward trend. So I want the stock going in the upper right-hand corner of the screen. Now, we also have several lines on here. We have a blue line, a red line, and then we also have this green line down here. These are what we call technical indicators. So they help you gauge whether the stock can go up, can go down, and just given it, some trends and indications. So the blue line here is what we call the 90-day moving average line. The red one is the 200-day moving average line. The only difference between the two here is the red, the 200-day, is going to act as a harder support and harder resistance. So when a stock is above it, like it is up here, where it's above the moving average lines, it acts as support. So you guys can see where it acts as support, where it hits it, we actually get good buying pressure. On the flip side, when the stock falls, below it, let's see if we can find a point here. Well, this one here just has a really good upward trend. But often what we see here is a stock when it's under it. You can see it a little bit in here where we just have a harder time breaking above it when the stock is below it. So you always want to make sure the stock, when you buy it, it's above the moving average lines, coming down on them. Now, this other indicator down here is what we call the RSI. The RSI stands for the Relative Strength Index. It tracks momentum, pretty much determining if a stock's overvalued or undervalued. It's a really, really important tool and probably the most important tool you guys can use. So now, right here where we entered this position, the stock was trading for near and around a 34. Anything historically under about a 35 to a 30 represents an undervalued point for the stock. So looking back here, the previous time it was trading for a 34 was back in here where we had this great move from $700 to about $870. Previous to that was in here. Previous to that was in here. So just looking back at previous history of the stock being a 34 in the RSI historically has represented a really, really good opportunity to buy the stock. So now you're asking yourself, okay, we have heavy support on the moving average lines. Stock sold off down to support. It's undervalued on the RSI. How do you buy it? When do you buy it? So there's a lot of great ways you guys can go about it. The way I would recommend is using the hourly chart and just finding support. So you guys can see in this window right here, we have good tendencies of getting buying pressure in there. So it hits it, buying pressure, buying pressure, buying pressure. So now obviously you'd want to enter, and we averaged in at about 805. So we didn't buy at the peak bottom or the peak top. We kind of got that middle price, which is fine. Now then you keep your stop loss below the lowest wick here. And what we really want to look for is this. So this is what we call a golden cross. So this is where we have that 90-day moving average line break up through the through the 200-day moving average line. This is a huge and bullish thing for the stock to do. Some traders will actually even enter on this move, and you guys can see following that, the stock rallied its way up and was over at one point $918 a share. Sold off here, and this is where we exited the position, is where it started forming this downward trend and it started breaking through these moving average lines. So using these, the strategy, it's a very simple way where you guys can start focusing on your strategies, start focusing on building a small account. And if you're just starting out, guys, there's a couple of things. Check out our school. You won't regret it, because what we talk about and what we teach is how to find these plays. And we have a 50% off sale, so check it out. But more importantly here, we focus on realistic returns. I'm not a trader where I'm going to give you alerts every single day and you have become, you guys are completely dependent on me. No, I teach you how to find stocks that are undervalued. So guys, check it out. You won't regret it. And don't forget to sign up with Moomoo. They're awesome. I'll put them down below as well. It's just a broker I really, really would highly recommend for all types of traders. So whether you're a day trader or swing trader, it does a great job, and a broker I would really, really recommend. So guys, I hope you guys all enjoyed this, but this is what I would do if I were to start over, is I would focus on education. I wouldn't fund an account. I would paper trade for 6 months, start small, and just slowly build your way up. With trading, you got to remember there is no rush. You have to treat it like a job, like an engineer, like a doctor, a lawyer. And what I mean by that is it takes years of hard work, of education, of going to school in order for them to see results, right? So you have to have that same approach with trading. If you want it to be a job, you got to treat it like one. So guys, hope you guys all enjoyed it. If you guys did, hit that like button, subscribe. We'll see you guys in the next one. Hope you guys have a fantastic rest of your day, and take care.